This dashboard displays the current scale of the blockchain ecosystem. With over 560 million users and a total market capitalization exceeding $2.7 trillion, digital assets are no longer a niche experiment. They're a significant component of the modern financial landscape. But as global adoption continues to grow at this rapid pace, the primary gateways for these users are showing severe signs of structural failure. This comparison highlights specific friction points within traditional exchanges. Users frequently deal with complicated navigation, high fee structures that reduce their capital, and a lack of clear, auditable data. In this model, the participants provide the liquidity, but the centralized platforms retain the majority of the financial rewards. For the digital economy to mature, it requires a shift toward an integrated infrastructure that distributes value more equitably. Phiquence is designed as a complete digital financial ecosystem rather than a simple trading platform. This architecture integrates 5 specialized hubs, covering technology, community, and governance, around a single central exchange. The system's design philosophy is informed by the mathematical proportion of 1.618, the golden ratio. Applying this principle of balance to the network's code aims to create a more sustainable environment for long-term participation and value creation. This blueprint is intended to transition financial utility back to the people who maintain the network's liquidity. The foundational asset is the GPHI token. Built on BEP20, it provides a transparent on-chain record for every transaction. The network uses a fixed supply model, capped at exactly 2.618 billion tokens. Crucially, a zero minting mechanism protects the system from arbitrary dilution. This security layer includes a human validation protocol, which uses specific verification points to ensure the network is driven by actual participants rather than automated bot manipulation. By combining a mathematically scarce supply with bot-resistant verification, the system establishes a predictable baseline for the token's long-term utility. Individual users contribute to this stability through the Phiquence 365-day staking programs. By committing assets to the network, participants receive daily system rewards. These range from 0.4% in the starter tier up to a 0.8% yield for those in the Zenith program. The 365-day lock period is a mechanical stabilizer. It secures the network's liquidity, making the asset less susceptible to sudden large-scale sell-offs. This predictable liquidity allows the smart contracts to distribute verifiable rewards based on the actual volume and activity within the system. In this ecosystem, the decision to provide long-term network stability is the primary driver of an individual's financial growth. Community expansion is managed through the neural matrix distribution system. This system allocates 61% of the total distribution pool specifically to reward users who help scale the network. This starts with the direct sponsor bonus. When a participant uses your referral link to join the network, you receive a 6% allocation from their activation. The system is designed to reward deeper participation. By meeting specific team volume and direct referral targets, users qualify to receive rewards from additional generations within their network. Initial growth occurs through the entry and builder zones, which cover activity across the first 6 generations of a user's network. As team volume scales, participants reach the leadership and elite zones, which extend reward eligibility down through a maximum of 16 generations. This multi-generational matrix ensures that the growth of the platform as a whole is directly tied to the individual incentives of its participants. To maintain access to these rewards, participants must adhere to active ecosystem compliance standards. This involves maintaining an active staking position, a valid cycle status, and meeting the minimum volume thresholds required for your specific generation level. These requirements provide a clear structure for advancement, tracking a user's progress from an initial foundation member up to a visionary leader. This synchronization ensures the network remains healthy by requiring leaders to remain active and supportive of their underlying network. This global expansion strategy involves establishing strategic hubs across North America, Europe, Asia, and beyond. The goal is to build a borderless financial infrastructure where technology and participation work in tandem. By centering the entire network on the principle of the golden ratio, Phiquence aims to deliver a digital economy defined by transparency and balance. This architecture is an invitation to transition from a passive consumer to a participant in a coordinated global financial network. It is a system built to achieve true balance and secure real, sustainable growth.